Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and here we are wrapping up this week and preparing for our upcoming week ahead. And again, next week is going to be a very important week because we have a very busy schedule ahead. So let's get into it. As always, we'll be taking a look at what happened in the markets, do a top-down analysis, take a look at currency baskets, take a look at news, and then we'll take a look at some possible setups. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at last week, not a whole lot of change. And remember, we talked about how seasonality-wise, this is where volatility picks up. We really haven't seen that materialize yet. But we definitely have some events next week which could change things. So as we take a look at broader markets, we are rallied to new all-time highs. So again, no change there. And then volatility, VIX, or just a broader market volatility just remains at the yearly lows. So markets are very complacent, very happy, and not a whole lot of change that's coming, comparing to what we saw early this year. Markets are really quiet right now. Now, when we take a look at the dollar and the yields, they remain a bit under pressure. But that, again, is a lot to do with the FOMC rate cut expectation and the FOMC rate decision that's due next week. We'll talk more about it briefly. But one thing to note is that percentage-wise, it's still a percentage small move. Looking at last year, dollar was way more under pressure. We saw a lot more big percentage moves. So right now, even though the dollar is sort of fluctuating back and forth, and even though it's down for the week, it's still a percentage change that's smaller there. So something to keep a close eye on going to next week. So market is still expecting 3 rate cuts by the year end, and those expectations hasn't changed. But with the FOMC next week, the surprise is not going to come from are they going to cut rates? I mean, right now it's a 94% chance that they are or they will cut rates. Now, the question really is that how aggressive they are going to be with their rate cuts. Right now, market is expecting rate cut at every single meeting. But again, if that expectation changes or if the Fed sounds more cautious, I won't be surprised that we see a bit of a reversal there, both in the dollar and the equity markets, because as the expectation is there for market rate cut, that's a good news for the markets. But the broader markets continue to rally higher just based on that notion there. So this is a week where we'll find out, and then hopefully we'll see some expectation change that will drive some bigger percentage moves. Now, in the crypto market, we're seeing a very similar thing. They are correlated with the risk trends. So as the market stays very positive, the market sentiment remains positive and volatility remains low, we are seeing a bit of a momentum coming in, especially in the Bitcoin and Ethereum. We saw some money coming into it. So we talked about it before. Lately we are definitely noticing some, the crypto markets following the risk trends. So I think not expecting a whole lot of change unless those risk trends change in the markets. So let's just take a look at this week events and see what really materialized when it comes to numbers. Remember, as we recap, we take a look at what we were really focusing on this week, and that was the U.S. inflation data. That's the main thing that we were looking at this week. Let me tell you about PPI, which came in slightly lower than expected. So you can see that was not a big mover off of that. Now, when it comes to the CPI numbers, as you can see that this is where, we did see an increase as expected to 2.9. The core was in line with expectation, but broader CPI, you can see that it was a little higher than expected. So when you look at that number and say, well, that is, that's more, it's not really, inflation not really going down. Inflation is either sticky or is going up. But now that day, we saw a conflicting picture because this one, while it showed a bit more increase in that inflation, but take a look at unemployment claims. This one rose to the highest level in the last 2 years, the highest level since 2023. Now, we talk about the Fed really has a difficult job right now is to balance the employment, but also look at inflation. That's what they have a dual mandate, and right now it seems like that's the tough juggling act. We have seen employment numbers getting weaker, and now the unemployment going up. Like that supports that picture, and that's why we are seeing still an aggressive expectation that markets or the Fed's going to cut rates because employment situation is getting a little worse. But I think at the same time, you look at the inflation picture and say, well, inflation not really drastically going down. So I think this is just a tough juggling act. And then I think this is where market might be getting ahead of self. And maybe next week they come out, maybe less dovish on their rate cut expectation. I think that's what we'll see a change there. But you can see that this really caused some mixed or whipsaw right at the beginning there. So didn't really saw a clear picture this week. If we had gone and seen all these numbers running hot, now I think we would have seen a bigger move. But you can see that inflation numbers were not so hot, but they were still more in line as expectation. But the unemployment claims kicking up, we probably just stuck in that little limbo here with what the Fed's going to do. We also had the ECB rate statement, and they just held rates as expected. No fireworks whatsoever. Remember, things change when we see a bit of a change from expectation. But if things are more in line with expectation, we don't see a whole lot of move there. And I think Euro itself, I'll talk specifically, but I think Euro seems to be, it has outperformed for the last few months. And it seems like it's sort of topping out here in the short term. Now, when we take a look at the numbers today, you can see the pound GDP. That was more in line with expectation, nothing too crazy going on there. And we saw a slight dip in that consumer sentiment. So overall, not a whole lot of emphasis on the other one, but the main one was really the inflation number, which didn't really give us that big firework that we were hoping to see. So I think it's all going to come down to next week when we get that the FOMC rate statement. So let's just take a look at last week's review and take a look at market performance and the numbers. Now, when we take a look at the numbers, you can see it was a pretty solid week as far as the risk trend goes. S&P up was 1.67%. World stock index up 1.71. Cryptos were up. Gold was up. And then oil was up. So pretty much everything was up. Now, when you take a look at the chart for the S&P, now you can see that markets were kind of going back and forth in that range. We did break out, and pretty much it was staying positive since then. Now, markets are, while we are at this pretty crazy high levels, if you look at the momentum, momentum continues to be positive. Now, as we look at into next week, I think this is where market could either accelerate higher after the FOMC rate statement, or we could see a pullback. Remember, risk trends are important to watch, especially if you're looking at risk on versus risk off. Right now, it's still pretty risk on, meaning that there's risk in the markets. People are putting money into the markets. Is not a whole lot of fear. That's what this is telling us. But I will be keeping a close eye on the markets next week just to see, if there's any sort of indication for any sort of pullback or any reversal. Now, that's what we're going to be paying close attention to. But overall, like I said, if you're really following the trend in the broader markets, they are on the upside. Volatility remains to the downside. Now, let's take a look at the numbers. And one of the things I talk about even in the midweek currency room is a bit of a rotation. Remember, one of the things we always talk about, especially at certain events, at certain times of the year, as we go from summer trading to the fall trading, is there a rotation taking place? And we definitely have seen a big rotation in the Aussie and Kiwi. Aussie had turned his corner like mid-August, and then Kiwi is also following his suit as well. So you can see the Kiwi actually was a lot more weaker. Now the trend score is getting a little better. So that's really where the money's going. Remember, we are, as a trader, keeping a close eye on the money flow. Now, where's the money going? If you look at entire summer, in the last 4 months, we saw the money just kept pouring into some of the European currencies. Aussie, Kiwi didn't take part. and we saw the dollar and the yen continue to fluctuate. Now, that's not the case anymore, and I think something we need to pay close attention to. Other than the dollar and other than the yen, I think the European currencies look interesting as well. As you can see this week, dollar was weak, yen was weak, but guess what? The euro and the Swiss franc was weak as well, especially euro definitely was closer or at par with the USD. So I think this is where we might be seeing some rotation taking place, and then seeing the favor for the Aussie Kiwi over the European currencies. Remember, the risk trends are pretty strong as well. Traditionally, Aussie Kiwi follow the risk trends, which hasn't been the case in the last 3-4 months when markets are hitting all-time highs, but now we are definitely seeing that rotation taking place. So I think as we take a look at data next week, the data is pretty heavy on the dollar, but I think we also need to take a look at the European currencies as well for a possible pairing going forward. Now, when we take a look at the crypto market, you can see seeing a jump in the Bitcoin and Ethereum. Remember, Bitcoin Cash had a big jump just a couple of weeks ago, and then we see the Litecoin. So they kind of paired, or they underperformed, while we're seeing the Bitcoin and Ethereum sort of playing that role and having a bit of a resurgence in that move. Now, let's take a look at market analysis, take a look at our outlook, start looking at charts going into next week. So, like I said, market outlook hasn't changed. We are still at that point where the risk trends might either stall or consolidate or continue moving higher. I think that's really where we are. But at the same time, we also need to take a look and see if there's any sort of pullback. We are far from the moving averages. And if those pullbacks happen, then, that will be a good indication to know, do we need to move on from a risk on to a risk off, meaning then flight towards safety. Right now, it's flight towards risk. Now, that's really where we are in the broader markets. But now let's just take a look at, some of the other charts. Here's the crypto basket. As you can see that they have been mostly range bound for the most part. Now, the last 2-3 days have come up, and now we are seeing things sort of break out a little bit. We'll find out again. Like I said, if the risk trends stay strong, I'd expect this to maybe continue outperforming here. But at the same time, if those things change, any underlying situations change, we need to change and pivot with the markets. Now, the last one I want to take a look at is this yields. And you can see that yields have been going lower. This is the 10-year yields overall, stalling a little bit here. Like I said, this is going to come down to the FOMC rate statement next week. If the data, or if they are less, dovish, I wouldn't be surprised that we see a bit of a rise in those yields. If they are actually dovish, then we could see a little bit more of that move down. Again, that's going to be dictated on what the statement says. Now, let's talk about expectation. I always talk about, a lot of times traders say, hey, I think I'm expecting a big move to happen, but realize that market does a very good job at pricing things in. And whenever you see numbers or central bank and they are not in line with what market's expecting, that's where repricing happen and we see a big move higher or lower. So what we are seeing here in this rate expectation, 95%. So that's already priced in. If they cut rates by 25 basis points, that's not a big market moving event. That's already priced in. Now, what's going to be more important is what the expectation goes for future meetings. So here we are looking at October. Right now, market's sitting at 80%. Go to the December meeting. They're sitting at about 75%. So again, looking at 3 rate cuts this year. Now, if the market or the Fed doesn't support that narrative, what's going to happen? We're going to see this numbers comes down pretty fast, and then we are going to see the dollar rise and the yields sort of rise. So I think this is where we have seen this happen over and over in the last 3 years, where expectations start to run ahead of us, and if the Fed is not in line with expectation, then we see repricing. So I think dollar you really need to be careful about, because it could go really either way. Now let's take a look at next week events, and you can see that it's a jam-packed week 4 central banks, all this economic data. So pretty much nothing really on Monday. And I think that will probably be a better day not to trade, because you will have your handful with these events for the rest of the week. So we start with the Canadian CPI. As you can see that this one, we'll find out what the expectation are with the CPI. But again, the Bank of Canada, this is the one I actually find surprising. And we'll talk about charts, because with this recent jobs report, we were seeing expectation sort of rise for a rate cut. But when I look at this one, I was actually surprised to see that it's sitting at 2.75, no expected rate cut. Now we'll find out if that things change on Monday. Sometime I've seen things, maybe change over the weekend or by Monday. But I won't be surprised. I think if the Bank of Canada does cut rates, but because and especially if this inflation number comes in softer, that that will be a much easier decision for the Bank of Canada to cut rates, especially at the same time as the U.S. is cutting rates. I think it makes sense. We're seeing that in the Canadian dollar. We've seen that weakness here. So again, I think if there's a surprise there, we could see that there. But yeah, I just found that interesting that they're looking for holding the rate steady. So starting Tuesday, we got the CPI and we got the U.S. retail sales. So both the dollar and the CAD will be closely watching. And then Bank of Canada rate statement on Wednesday, followed by the FOMC on a Wednesday as well. And then also followed by the Kiwi GDP numbers and the Aussie employment report. You can see that Wednesday is our most importantly busy day. We'll discuss more in the midweek currency room and our strategy and see how things are moving into that rate statement. And then after that, we have on Thursday, we have Bank of England rate statement. And then we are looking at the Bank of Japan. Now, I think the yen, the Bank of Japan, not really expecting to make a change, but I think next week dollar yen probably make a lot more sense to watch for a bigger move, because it's been stuck in that range for the almost the last few weeks. So very important week next week, and most of that focus is really on the central banks. See what the statements are, and I think that is going to really set the tone. And especially, hopefully, we'll see a bit more clarity and breakouts for in some of the currency baskets, because things have been range bound for the most part, and this is a good time and opportunity for breakouts to happen. So going to next week, like I said, market, I think overall like to stay bullish, but focus going to be on the statement. And I think the opportunity that I see is the markets may be running too dovish, and maybe the Fed will come out and be less dovish. And if that's the case, repricing, and then we could see some reversals taking place. So I think this is a week where it's very important to take a look at both sides and be flexible. Now with the central banks, we got September 17 and 18. So pretty much Wednesday and Thursday that we get a bunch of that data. So be vigilant, be careful, and be mindful of, like, if you're entering new trades, those events could really spark a big move higher or lower, and you can decide either to trade before the news, on the news, or after the news. There's always that news trading strategy that you need to make sure you're consistent with that decision making. Now on a CPI data and US retail sales data on Tuesday, I think that will be definitely a mover. And then on Wednesday, we have a pretty busy day with 2 central banks and rest of the inflation data from the UK, and then we got Kiwi GDP and Aussie employment report. So definitely excited for this week, as we have a lot of data to go through. So while we are looking at all this data to go through, let's do our currency analysis. Take a look at where the trends are, what the currency basket is telling us. Let's just start with the crypto. As you can see that with the crypto, first thing, we'll take a look at Bitcoin, and we're seeing a bit of more improvement in that trend score. You can see that things were not looking so good, and here we are above the 20 and the 50. Again, keep a close eye on the broader markets. Take a look at risk trends, and I think that would likely to dictate where the crypto is going to go. Now, Bitcoin Cash, you can see this thing has kind of fallen back. Here we are with Ethereum. We got a big resistance level of 4,800. We are running at the high of this little range here. You just keep in mind is that we have a key level of resistance to clear, but this could, be in that little wider range to deal with. Now, here we are with the Litecoin, and I don't really love this chart here. So, I think overall, the Bitcoin chart and the Ethereum chart definitely looks a lot better to trade. Now, let's talk about currencies. Now, in the currency world, you can see that I have 2 months of data in front of me, but if you take a look at outside of that, you'll realize that since April, pretty much things have kind of gone sideways in a lot of the currencies. So here's the first one, dollar. You can see that even the dollar, first thing first, if you're trying to decide on what the trend is, take a look at moving averages. When the moving averages are flat, then not a whole lot of direction is there. Even though we are below the 20, the 50, prices really hasn't gone, anywhere. So even though trend score is a -2, I am really in the middle here for this US dollar. I think it could go really either way. The big move in the dollar happened in the early part of this year, and now things are just kind of going sideways. And again, with those expectations, if there is a repricing in that expectation from a 3 rate cut to maybe down to a 2 rate cut, now that's going to change things. And I think dollar could stand to have a big move one way or the other. And same thing, if the Fed comes out a little bit more dovish, I think that's kind of priced into the markets. I think there's a bigger risk if those expectations sort of pairs back. Anyways, dollar, not a strong trend, more range bound. So look at those key levels. I think that's really where we probably see a better traction. But right now, the way dollar moves is that it has a couple of down days with a couple of up days, not as consistent to the downside. Here we are with the yen, and I think I do like the yen short a lot better. Here we are with the trend, as you can see that this thing has been definitely a lot more trending a little bit here in this daily chart. And you can see that 4-hour chart kind of confirming that as well. So going to next week, I think if I really have to pair something, let's say if I have to go long the dollar, I think the yen as a counterpart makes sense. But we'll take a look at dollar yen chart as well. But while things have been sideways for the most part, we are looking for those divergence to start emerging here. So this trend score on the yen, actually, I do like a lot better. Now, here we are with the Swiss franc. And let me tell you, this was a good example of why you need to be mindful of these resistance levels. As you can see that this poke above it, and this is one of the reasons why I always say, it's not the initial break, it's the follow through. So you should really put a candlestick above it or price action above this. It never actually did break above it and fallen right back in the range. Now, this thing is below the 20, in this range here, which I think it could go either way. Now, if the risk off move comes in the markets, meaning we see a bit more flight towards safety, I think those situations, Swiss franc does well. If the market stays where they are, I think it probably continues sideways to be a bit lower. But on the chart basis, I think I like a euro short a lot better because, here we are below the 20 and right at the 50 here. I think if this falls below this 50 moving average, so, what I would do here is just set a alert here. If this basket breaks below this level, I definitely want to be short the euro. And, this is where we can go and start pairing things based on relative and the weakness. But yeah, for the first time in a long while, I think I do like the risk to reward in some of the European currencies, especially the euro to short. Now, here we are with the pound. I don't really love the pound here with the price action. You can see this thing is in a very tight range. So until or unless it's really breaking higher or lower, don't love this price action. So looking for confirmation, if you're looking for a break, look for that break of that 50 day moving average, both on the euro or the pound, or even this Swiss franc. We need to see you get below that 50 day moving average. That's where the pressure onto the down move can build up. So here's the one that's actually I do really like on the short side. And again, I will be taking a close look at the dollar CAD. I think Bank of Canada did have a decent reason for them to cut rates. And if that's the case, we're seeing already the price action looking pretty weak. The trend score is a -3. This one, I think I do like it here on the short side, but we have the event risk. Keep that in mind. I'll be closely watching this, especially if this, let's say this is the best price action I can find is that if this rally a little bit in the shorter term, let's go back to the chart. Let's say just rally a little bit and then roll over. I think that would be a best looking sort of pattern as we go from a sideways to more directional. So CAG again goes on the top of the list for me as a potential trade. Now let's see where the movement has been. Look at the trend score for Aussie +3. Price action continues to look bullish. This is the level. This is the resistance where prices did stall, but then you can see after that it has been nothing but moving to the upside. So now I think what you want to take a look at is that now this is a support. I would love to see this pull back to kind of buy into. Again, trend score is there, but the point is that if it's the right time to enter, look for pause basis to get into. On a daily chart, it's showing a bit of a pause. If it does pull back, that's okay. I don't want to short it there, but at the same time, I'll be looking for grabbing an entry as long as it stays above that breakout point. And even the Kiwi, actually, I do really like here as well. Now, Kiwi is playing a catch-up to the Aussie. And again, same thing. It's been below the 20 to 50-day moving average for the last few months, and it's playing a nice little catch-up here. So here we are reversing a little bit here, but look for this little level to break out of. And I think this is where Kiwi definitely has a good chance as well to play a little catch-up to the Aussie. So when it goes to our trend score, it's pretty clear where the movement is, Aussie and Kiwi. Pretty much that's really where we really like that direction. The European currencies are either a zero, more on the sideways range. Let's see if they do break below that 50-day moving average. And I think that's where the next possible opportunity could be. And then here we are, dollar and the yen are showing on the downside, and even the CAD. Now we have pretty much event risk for all of these. We have Bank of Japan, we got FOMC, we got Bank of Canada. So just realize that this could change pretty drastically. And that's where we need to be more all hands on deck when it comes to looking for confirmation or continuation. Now, velocity score, you can see today, not a greatest trading day. Everything is either between a +1 or a -1. I think this is where the bigger focus, and I think market might likely to be constrained here a little bit till next week when we get that data. And I think that data would clear things up and give us a better opportunity. So let's go ahead and prepare and take a look at some possible trades. So let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so here we are with the chart. As you can see, let's just see how things are developing here. Looks like markets probably closed at the highs of the day. Not a whole lot of change there. So let's talk about some of the currency setups that we're looking at. So here we are with the dollar, and this is what I said. Take a look at this move here, a range here, and a range here. So I think this could go really either way. What you're looking for are those key breaks. And I think talking about key breaks, we have Canadian dollar definitely that is showing a key break. And I highlighted this chart early this week, but I mean, take a look at where we are. We are at the lows that we saw early this year. Now, the price action continues to look weak. So this is where we are. And I think this is where, as long as it holds that level, I think this thing it definitely looks better for the short. I would love to see a bear rally to short into. So that's why I'm not really keen on being active on a Monday. I think I'd rather wait till Tuesday and Wednesday to really start to become more active as we get that data. But you can see this one has made a nice, decent push. Aussie, like I said, Kiwi, even though this seems to be topping out a little bit, I'm definitely interested in those currencies as long as, the risk trends also stay strong. And I think if you want to avoid, the dollar and the yen move, like it's with the news event, I think we can also take a look at European currencies, the euro and the pound. And like I said, this is where I would add alert. That's what I will be doing here, is just adding alerts, like, okay, notify me when this breaks this support area, because I think that's where we will likely to see a bigger move. But I mean, I like the pattern here where we made a lower high here, and now we're just getting a little bear rally. Now with the rallies, then I think that's what you need to know is when to use those bear rallies, especially when you start to see a direction. You start to see those bear rallies as selling opportunities. Now, same thing when things are moving higher and you see those pullbacks. Now, those pullbacks are a good buying opportunity, as that's why I said, like, even taking a look at the Aussie, it looks extended for sure. Pullbacks could provide a decent buying opportunity. So that's where we're going to look for some pullbacks and bear rallies. So let's just start pairing things. First one, I'm going to take a look at Euro Kiwi. Some of the Euro Kiwi, actually, I do like it here. So here's another good example of a trend. We just posed a new high and we retested that level. So it seems like a little double top to me. You can see that this thing, did make a higher high, a higher low with a lower high. You see the trend change? We got a support here and then it just pierce through the support. So now we have below the 20, above the 50. Then I think this is what I'm looking at even early part of this week. If we just get a little bear rally, I think that's the one I'll be looking short into. And these are the good ones where you can start with a half an opportunity. And once you get that break below that, that's where you can actually start to leg in, start to scale into that position. So I think for now, it is finding support, but I'll be looking for a bear rally to short into there. Similar setup in Euro Aussie. Euro Aussie, you can see that this thing, I like it here. The 20 and the 50, they are starting to trend a little bit lower. Once the 20 breaks below the 50, we got a bit of bearish cross here. See, in the shorter term, this is the level of support that we just broke. Would love to see a bit of a bear rally to short into. So yeah, outside of those dollar and the yen crosses, I think for the first time, I do like this rotation where I'm looking at some of the European currencies to the short side. Now, let's talk about the dollar. Now, let me take a look at euro dollar first. So this is the first chart that I'm paying close attention to. I got my alarm right here to notify me. Does this break above that 118 level on euro dollar? Because if this breaks out, then it's clearly telling you that maybe the dollar is the weakest currency out there. We should be looking at dollar to the short side. So at that point, you can easily go into the Aussie dollar and Kiwi dollar. But you can see that this thing, it is sideways for now. It's not giving us a good indication. So right now, I think we want to pay close attention to these correlations, but also be open to not just only the dollar pairs, but to take a look at everything else as well. Based on whatever the outcome is, here's the first chart I wanted to point out, dollar CAD. This one I'm paying close attention to next week, especially if we get Bank of Canada more dovish, and if we get the FOMC less dovish. I think this is the one above that 139. Really like it on the upside. So this is the first one I'll be paying close attention to. You can see this kind of bottomed out right here. This is all going to come down to those central banks and those expectations. Dollar yen is another one that I'm paying close attention to. You can see this has been a very choppy trade. Early this year, there were definitely much bigger moves in dollar yen, going from 142 to 148 down to 142. That's a bigger percentage move, and there's a lot more opportunities to be had even within that range. As you can see, that this range has really narrowed down from like 148. 148.50 down to 147. Like that's not a big percentage change. But for us to really figure out which way it's going to go, we need to see a break above or below. And in this case, I think we want to be more open to it, see which side does it break. So what you need to do is you need to make sure whatever event you're looking at, think about best and the worst case scenario. What if dollar is the strongest currency? What if the dollar is the weakest currency? And what pairs would I be, pairing that with? I think that's really where you need to, be clear on what to trade. Now, here we are with the dollar, Aussie dollars. You can see it broke above that 66 area. This is pausing a little bit here. let's say if the dollar is the weakest currency next week, well, guess what? I think Kiwi dollar, Aussie dollar probably be the best bet. Here we are. Kiwi dollar and even the Aussie dollar, you can see it got above that 50-day, 50-day moving average. I think those will probably be the right place to be. Now, if the dollar gets stronger, I will be very much open to the euro dollar. I'll be very much open to dollar yen, dollar CAD. I think those will be our decent choices to take a look at. Even the pound dollar. I mean, pound dollar is right at the resistance, so don't love it. So, it all comes down to a risk to reward ratio, rather than, finding the best looking setup. Sometimes we just want to be there when those tides are changing. And I mean, if you look at this one, of course, it's above the 2050, but I realize that it's going sideways. There's decent opportunities to be had where, it's moving like 100 pips, 150 pips. Now, we will be wanting to capture those moves. So being on the top of where the momentum is, where the movement is the key here. And that's where you want to be more flexible. Here's the other couple of pairs that I wanted to highlight. I mean, this thing, you can see that beautiful break above that. I mean, look at the range that we were in for almost 3 months, like May, June, July, August, 4 months of range. And, we have a nice 5 days of run right there. So, like I said, love to see some pullbacks to buy into, some pause. You can see we are pausing a little bit today, but there's definitely a direction. Looking for directional move. Definitely, we are seeing some direction taking place. Here we are with the Kiwi CAD. As you can see, Kiwi CAD is, it was in a downtrend. Now it's back in the range. The key for this one would be to break above that 83.15 or 83.20 area to really get us above. And you can see after that, there's definitely decent risk to reward on that trade as well. Now, we can also take a look at yen. Like I said, yen crosses as well. Aussie yen. Let's take a look at that one. What if the yen is the weakest currency next week? Let's say Bank of Japan doesn't do anything and yen just falls lower. And I think in that situation, you can take a look at Aussie yen and Kiwi yen as well. They are hitting that resistance, but remember, if you think this is going to be directional, then you want to start buying those dips. I mean, look at those. Look at the resistance level on Aussie yen. 97 is hitting at 98. I think there's definitely more room for this to run if the yen turns out to be the weakest currency. So it's all about pairing the right thing at the right time. That's really the key here as we go into next week. And as we look at all this data and we take a look at all the setups, remember, being flexible is the key, because if things turn out directionally one way or the other, we want to make sure that we are pivoting with that and not just being married to an outlook, because things can change. And if we don't respond in time, then a lot of times you can miss a move or be on the wrong side of the move. All right, so let's just wrap things up over here. So again, a busy week next week with central banks and economic data. This is a week where you want to be active. Remember, we tell you where not much happening. Let's be less active. Next week is the week to be active and actively looking at positions. And again, make sure that you're following a plan and being disciplined. That's the key when it comes to trading the markets, and especially trading the news events, because news events can have many different outcomes, and you just have to be prepared to know what to do and what sort of outcome. So we'll be very active next week. I'll keep everyone posted. Make sure you check in the Discord. I'll post things there as the market develop. But yeah, gear up for next week, and hopefully that will be a good trading week for everyone. Thanks everyone for joining. Enjoy your weekend, and let's prepare for next week. Cheers, everyone. Bye-bye.